Good morning, friends. Welcome to Weekly View on Markets. Markets staged a good rally during this week also. They continued uh, momentum which was observed during the Diwali week. Nifty gained 306 points in this week. Mid and small cap stocks outperformed during this week also. Market breadth was evenly poised. That means the advanced and declining stocks were almost similar. Technical charts have shed the negative sentiment which was created due to head and shoulder pattern about a fortnight ago. So that has been negated, and now charts look very healthy. The charts indicate that market is set for further rally in the coming week. Escalation in Israel and Hamas war, and also escalation in Ukraine conflict is a worry for the market. Traders should watch the development on the state elections. India VIX has already started rising and is trying to factor in the volatility that may arise out of election results. But traders need to be cautious about this, and investors need not to worry about the short-term volatility. Let us look at the performance of indices during this week. Nifty closed at 19,731, gained 306 points, closed with a gain of 1.58%. Bank Nifty underperformed during this week, lost 236 points, that is 0.54%, and closed at 43,583. RBI classified the retail loans as high risk loans, and that has a negative impact on banking stocks and NBFC stocks. So that is why we have seen a small correction in the bank stocks during this week. Mid cap and small cap continues to outperform. Mid cap index is at 41,811. It is at a lifetime high with a gain of 1078 points for the week. That is 2.65% gain. Small cap index is also at an all-time high of 13,881, gained about 506 points. That is 3.87% during this week. India VIX has started rising. It is trying to factor the volatility arising out of the state elections that is due in 5 to 6 states. So India VIX has risen by 6.39%. It is at 11.82. Now let us look at sectoral performances. Almost all sectors except private banks and NBFCs gained during this week. Only two sectors were ended in red. Information technology gained the most. TCS announced buyback of shares that has boosted the IT sector. So IT sector gained about 5.07%. Real IT sector continues to do well and gained about 4.62%. Public sector stocks continue their dream run and gained about 3.24% during this week. Auto sector gained more than 3%. Manufacturing, consumption, metal sectors, energy sector, healthcare all gained around 2 to 3%. Media sector gained about 1.95%. Infrastructure, pharma gained about 1.8, 1.9%. The market breadth was good. There was buying in most of the sector. So due to RBI red flagging retail loans, there was some negative impact on banking and NBFC sector during this week. Now let us look at technical charts. This is the daily chart of Nifty index. As we can see, this was the neckline of the head and shoulder pattern, and Nifty has gone below this, but now it is fully recovered and come above the neckline, and also it is gone higher. So Nifty has closed at around 19,900 resistance level. As we can see, this is the resistance line, and If Nifty crosses about 19,900, then we will see Nifty again going to the all-time high level of around 20,200 and even going higher in coming weeks. The chart structure looks quite healthy at this point of time. It has overcome all the negative sentiments. This is the chart of the mid-cap index. Mid-cap index, as we can see, has crossed the previous all-time high level and closed at higher level of 41,811, and the chart looks very healthy. Technically, we are set for higher levels in Nifty Midcap Index. This is the chart of Nifty Small Cap Index. Here also we can see the small cap index is at a lifetime high, and the chart structure looks healthier. It is making higher tops, higher bottoms, and we will see higher levels in the small cap index also. This is the start of Bank Nifty index. Bank Nifty index still is at the resistance level. After just crossing the resistance level, again it has dropped below the neckline which was shown. So there is some negative sentiment in Bank Nifty and NBFC sector. We need to wait and watch. But for a long-term investor, this is a good opportunity to pick up stocks, quality stocks from banking and NBFC sector whenever there is a dip in the stocks. Now let us look at some of the fundamental factors of the market. RBI dollar reserves is at around 590.32 billions. It is more or less stable comparing to the previous week. INR USD rate is at around 83.27, and the dollar index has come down from 106 level to 103.82 levels. So accordingly, we have seen some appreciation in rupee also from lower levels of around 83.7 to 83.27. Gold price is stable at 61,690. So there was great demand for gold during the Diwali festival time. So the gold price is at 61,690. Crude price has come down and continues to drop. It is at 80.61 per barrel. So this is one good for factor for Indian markets. And correspondingly, we have seen the stocks in oil and gas sectors have started going up. The lower oil prices is good for the oil companies and also good for the Indian economy. Markets always like lower crude prices. So if the crude price drops below 80 level, we will see further rally in the stock market. FIIs have sold 204, 14 crores during this week. Their selling has come, and on certain days they have bought also. AIIs continues to buy. They have bought 1,579 crore during this week. Another good factor for the market during this week was the GDP estimates for the third quarter, that is the present quarter, is likely to come at 6.7%. So this is a good number. Market is uh, overjoyed with these figures. That is why we have seen rally in the market. RBI has classified the retail loans of banks and NBFCs as high risk loans. So due to this, the loan rates may go up, and that may have a impact on the demand of retail credit for the banks and NBFCs. This is the reason we have seen correction on Thursday and Friday in the banking and NBFC stocks. And due to say state elections that is going on, the election results will come in sometime in December. So there will be volatility in the market when the election results come out, or even before the election results, some kind of volatility will be factored in the market. This we have seen in raising the India VIX. The market has already started pricing in the volatility factor due to the election results. But this is a caution for the traders only. For long-term investors, any dip in the market is a good buying opportunity, and mutual fund investors also should not worry about short-term volatility. They should have faith in Indian economy. The growth in Indian economy is going to be good. Our macroeconomic fundamentals are quite strong. So mutual fund investors should continue their SIPs, should remain invested for good returns in the long term. So this is all for this week. If you like my video, please subscribe to my channel, give your comments, share with your friends. We will meet again next week. Thank you.